This might be the last time you see NIO stock trading this low. With a major delivery spike, a bold battery swapping initiative and big moves in funding and expansion, NIO is lining itself up for what could be a sharp rebound, potentially straight toward that $5 mark. If you've been watching the EV space and wondering where the next breakout play is hiding, this might be it. Let's start with what's catching investor attention: vehicle deliveries. In March 2025, NIO delivered 15,039 vehicles, a 26.7% increase compared to the same month last year. This wasn't a one-off. The company's first quarter cumulative deliveries reached 42,094 vehicles, which marks a 40.1% year-over-year growth. Total lifetime deliveries now sit at 713,658 vehicles. This level of momentum shows that demand is growing steadily even as the broader EV market faces headwinds. And it's not just about quantity. NIO is diversifying. The March figures include 10,219 units from its premium smart EV brand and 4,820 from Anvo, its newer family-oriented lineup. That dual brand strategy is giving NIO more market coverage from luxury to practical EVs. Now for the part that makes headlines: losses. In fourth quarter 2024, NIO reported a net loss of approximately $983.7 million, a deeper cut than the $772.3 million loss it posted the same quarter a year prior. Annual losses totaled around $3.1 billion, while yearly revenue grew 18% to about $9.4 billion. So yes, they're burning cash, but context matters. That revenue growth isn't insignificant, especially considering that this is a company reinvesting heavily in infrastructure, R&D, and next-gen product lines. The short-term pain could be setting the stage for long-term upside. To fuel further development, NIO announced a plan to raise roughly $450 million through a share placement on the Hong Kong exchange. They're issuing 118.8 million shares at a 14% discount. That sounds steep. But there's a reason institutional investors are still participating. They see what's coming. Proceeds from this offering are earmarked for expanding NIO's smart EV technologies and developing new models. That includes software, hardware, and infrastructure, particularly in the battery segment, where NIO is making bold moves. The company's partnership with CATL, China's top battery producer, is one of the most underrated parts of NIO's long-term strategy. Together, they are expanding a national battery swapping network. This is massive. Why? Because battery swapping eliminates one of the EV industry's biggest friction points: long charging times. Instead of waiting 45 minutes to an hour, NIO owners can swap their depleted battery for a fully charged one in under 5 minutes. This is a real value proposition, and no other major automaker is executing it at scale the way NIO is. Now, if you're watching this and thinking, but the stock has been dropping, you're right, and that's exactly why this might be the perfect setup. Short-term pessimism has pushed NIO's price down over 40% in the past 6 months, but those who wait for the perfect moment usually miss the run, and with all these developments converging, we could be near a major turning point. Just a quick shout out to our sponsor, Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward: 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. Here's where it gets interesting. Despite the decline, analysts are still setting a $4.89 average 12-month price target. That's more than a 26% upside from where the stock is right now, and many believe that target could be conservative given the current trajectory of EV demand in China and beyond. Moreover, NIO's stock is now hovering near its 52-week low, but its delivery growth and expansion strategies are hitting 52-week highs in terms of execution. That disconnect is where the opportunity lives. Let's connect the dots. You have record-setting quarterly delivery growth, a brand new product line expanding their market, a battery swapping partnership that fixes a critical EV problem, institutional investors pouring in hundreds of millions, and the stock price beaten down to near historical lows. If the macro environment stabilizes or even just stops getting worse, stocks like NIO are positioned to rebound the hardest. That's because they're fundamentally strong but temporarily discounted. And if they beat expectations even slightly next quarter, the short squeeze could send this stock flying. Look, NIO isn't risk-free, no growth stock is. But what you have here is a situation where the groundwork has been laid, the capital is being raised, and the execution is beginning to show up in the numbers. If you're looking for asymmetric risk-reward in the EV space, this is one to watch closely. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.